Good morning. Welcome to our Red Short webinar. Red as in something important from Red Sky Alliance and short as in once a week in 10 minutes or less. Today's webinar will be on U.S. banks breaking up with crypto. U.S. banks are backing away from crypto companies concerned by a regulatory crackdown that threatens to sever digital currencies from the real world financial system. Banking regulators are raising concerns about banks' involvement with crypto clients following last year's blowup of Sam Bankman-Fried's FTX. The Securities and Exchange Commission is aggressively pursuing the industry's biggest players in a crackdown that threatens to narrow their reach. That move has alarmed bankers who don't want to do business with customers in the SEC's crosshairs, people familiar with the matter said. Bankers are now reevaluating any exposure to the crypto sector, no matter how small, according to people familiar with the industry. The few smaller banks that got deep into crypto are reducing their exposure to the market or cutting ties altogether. Banks that kept their distance from crypto are trying even harder to stay away, closing accounts and shunning customers. The crackdown is squeezing crypto businesses. While the industry often pitched itself as an alternative to banks, these firms still rely heavily on banks to line up with a financial system that runs on hard currencies such as dollars and euros. Without banks, crypto companies struggle to pay their employees and enable customers to move money in and out of digital currencies. When Bitcoin first gained popularity years ago, it was difficult for crypto firms to open bank accounts. A handful of smaller lenders struggled to compete with big banks for deposit dollars, opened their doors, often banking only the bigger crypto players they thought were safest. These banks don't hold digital currencies. Instead, they provide corporate accounting for crypto companies. For a time, banking regulators warmed to crypto activities. In 2020, the Office of the Comptroller of the Currency said it would allow banks to hold cryptocurrencies for customers. Regulators reversed course following the FTX meltdown. In January, the three major banking regulators warned banks that they were concerned about their crypto ties. The regulators said they had significant safety and soundness concerns and questions if the industry could be safely banked. Regulators generally do not tell banks that they cannot do business with customers operating legitimate businesses. Instead, they categorize customers as higher risk through formal public statements reinforced in the feedback from examiners who burrow into their operations to make sure they're not taking undue risks. Banks often then decide these customers aren't worth the regulatory headache and cut them off. Matthew Homer, a former regulator who is now advising and investing in crypto firms, said his clients are having a difficult time landing bank accounts. A First Republic representative told Mr. Homer the bank avoids companies linked to crypto. Mercury, a banking service for startups, asked if a business is related to crypto in the sign-up process. Mr. Homer said, a spokesman for Mercury said it conducts more due diligence on these businesses because of regulatory uncertainty. A representative for First Republic declined to comment. Two companies trying to win banking licenses have been left in limbo after winning preliminary approval in early 2021 from the Office of the Comptroller of Currency. Both Paxos National Trust and Protego Trust Company applied to start banks that would hold crypto assets for clients and facilitate trading. Both financial organizations have received licenses to operate as uninsured national banks with operations limited to those of a trust company, meaning they will not handle deposits. It is interesting and dismaying that financial experts have not called out the cryptos for what they are. Economist Paul Krugman of the New York Times came close on the editorial page several months ago, July 12, 2022, but could not quite say Ponzi out loud. There are too many powerful players in the crypto business and no one wants to be sued. That's it for today. Thank you for joining us. I hope you enjoyed the material and found it useful. If you have further questions, you can contact me at the email address on the screen. Have a good one, and we'll see you next week. Thank you.